Malaysia's interim Prime Minister Hassan has unveiled a $4.7 billion stimulus package to counter the impact of the COVID-19 outbreak and to boost a flagging economy. Dr. Mahathir Mohamad has described it as a three-pronged approach to ease the cash flow of affected businesses, to assist affected individuals, and to stimulate demand for travel and tourism. The stimulus includes tax breaks, rescheduling of loans, and cash aids for firms in the tourism sector. State-linked companies and public agencies have also been asked to accelerate investment projects. Frontline workers dealing with COVID-19 will be given special monthly allowances until the outbreak ends. Meanwhile, the country's GDP growth is expected to slow in 2020. The growth rate is projected in the range of 3.2 to 4.2%, lower than earlier estimates of 4.8%. Shem Fenner from Oxford Economics says Malaysia is making some good moves, but it will be a tough road ahead.
It's quite good to see, and we did expect that they're actually hitting some of those sectors that we expect are going to be more negatively impacted by the COVID-19. So those that are a lot more related to the tourism sectors, helping with cash flows, but also by trying to boost household spending, which of course has been the key engine of growth for the Malaysian economy. I think it might be pretty hard to actually get a little bit more positive about the Malaysian economy anytime soon. In particular, that we are still looking actually potentially even downgrading growth more because we've had this sort of spread into South Korea, looking at downgrading China. So really it's still going to be, that impact on Q1. In fact, we're actually seeing GDP growth from Malaysia's GDP being probably below 3% before we start seeing a pickup from Q2 onwards. But even then, growth is still going to be closer to about a 3.7% this year. It's unfortunate that it's coming at a time when we are having this COVID-19 outbreak and the impact this is going to be having. I think really it's going to depend on how long we actually see this political uncertainty, this turmoil continue. If we do see this being more prolonged, extending more into March and beyond, this is going to have a much larger impact on business and consumer sentiment, hitting, of course, that private domestic demand, and we would then, under these circumstances, be lowering GDP growth further. It's also going to be would have a much larger impact on Malaysian assets, notably the ringgit. At present, we're actually seeing it sort of ending Q1 at about 4.2 against the US dollar, but if we see this political turmoil continue, we could see it be heading up to closer to something like 4.5.